Pantheon AI presents Markets Rise as Trump targets Powell, Tesla's tech pivot, and bank dividends soar. Good morning, everyone, and welcome to the PAI Morning Briefing. I'm your host, John, from Pantheon AI, and it is June 26th, 2025. So glad you could join us today as we dive headfirst into all the market action and the latest news shaping our investment landscape.
Absolutely, John. It's always a busy morning, isn't it? Let's get right into it then. What's the quick overview of the markets looking like today?
Well, Sarah, it's a picture of cautious optimism, I'd say. The S&P 500 is currently trading at roughly 6,133, nudging up about 0.34%. Our blue chip barometer, the Dow Jones, is sitting near 43,342, seeing a nice increase of around 0.6%.
That's a good start, especially for the Dow. How about the NASDAQ and the Russell?
NASDAQ isn't to be outdone. It's in the vicinity of 20,112, climbing by roughly 0.25%. And the Russell 2000 is also in the mix, trading around 2,159, up by nearly 0.8%. So across the board, we're seeing these indexes gently pushing upward.
Okay, so stability seems to be the theme for the main indexes. What about the crypto space? Any big moves there?
Not huge, but interesting. Bitcoin has seen a subtle downward adjustment, trading at approximately 107,247, down by a smidge, nearly negative 0.16%. Ethereum, though, is holding strong at around 2,430, with a modest increase of about 0.45%. So yeah, it really does look like a state of cautious optimism this morning, with stability on tap, even with some swirling headlines out there.
Right, and speaking of those swirling headlines, what are the major market trends we should be focusing on today?
Great question. There are a few key themes that really merit closer inspection. First up, this overall upward drift in the major U.S. indexes. It hints at an underlying resilience, despite some storm clouds on the horizon. And those clouds, well, some are forming from political comments and policy signals that are reaching investor ears far beyond Wall Street.
Oh, you're talking about the former President Trump taking aim at Jerome Powell, aren't you? That really rattled some cages.
Exactly. Announcing a successor well before Powell's term expires? That's a bold move, and it has absolutely rattled investors, contributing to a recent drop in the value of the U.S. dollar to a 3-year low. It really underscores just how sensitive investors are to any suggestion of a future policy shift, especially if it could destabilize monetary intentions or signal interference with our central bank's independence.
It's fascinating, isn't it? When you have these influential figures stepping into what has traditionally been the domain of technocrats, it just breeds this mix of skepticism and curiosity in the market. Investors are left wondering, is this a calculated tactic or just more political theater? I mean, these are the questions that keep us on our toes, constantly analyzing every word and every headline.
You got it. And if you think the scenario is a bit like watching someone try to juggle flaming torches while riding a unicycle, you're not far off. The stakes are incredibly high, and the implications could touch everything from currency valuations to bond yields and beyond. It's a complex dance.
It certainly is. But let's shift gears a bit. There's also a buzz in the tech sector that's hard to ignore. Tesla, for instance, is being reimagined, right? No longer just a car maker.
That's right. It's being repositioned as a high-tech robotics company. A benchmark analyst recently ramped up their expectations, pushing the stock price target to become the second highest on Wall Street, with a bold prediction of a return to a market cap of $1.5 trillion.
Wow, $1.5 trillion. That's a massive vote of confidence. It really shows that investors aren't just looking at production figures or vehicle delivery numbers anymore. They're assessing the company's potential in AI, robotics, and next-gen transportation. It could totally redefine industry boundaries.
Absolutely. It's a fascinating development. And speaking of big tech, we also have the Magnificent Seven still making waves, don't we?
Oh, definitely. These big tech companies are expected to outperform the broader S&P 500 with double their earnings growth. They just keep maintaining momentum, despite headwinds elsewhere. But it does make you wonder, can these giants continue to push the envelope? Or are we seeing the early stages of a shift toward a more diversified growth methodology? It's a huge debate among fund managers.
It really is. Now, moving to the semiconductor space, there's a noteworthy development from Europe. One of Europe's most important semiconductor stocks has actually seen a downgrade.
Right, and that's following concerns over Chinese semiconductor demand, isn't it? Even though the global market is buoyed by digitalization, analysts are cautioning that unforeseen shifts in Chinese market dynamics might have a pronounced impact by 2026. It's a sober reminder that fundamentals in international trade still play an outsized role.
A very important point, Sarah. And on the manufacturing and industrial front, we saw durable goods orders post their biggest gain in 11 years, a remarkable increase of 16% in May. Sounds great, right?
It does sound impressive, but I recall there's a catch. That headline number was significantly boosted by a flush of new Boeing contracts, masking some underlying weaknesses in broader business investment. It's a classic case of looking beyond the headline to see the real story.
Precisely. It's about what the real engine of growth is or isn't doing. And finally, let's talk finance. There's a noteworthy piece on dividends, which I know our listeners always appreciate.
Yes. Analysts forecast that about 20 banks, including names like Wells Fargo, Goldman Sachs, and Bank of New York Mellon, are poised to increase their dividends considerably following the Fed's recent stress tests. This is great news for investors hunting for yield, and it highlights increased financial stability.
It really does. So to quickly recap our key stories today, first, that political maneuvering by former President Trump targeting Fed Chair Powell and its cascading effect on the U.S. dollar, which has slipped to a 3-year low. Second, Tesla's ambitious repositioning from a car maker to a high-tech robotics innovator, propelling bullish sentiment and a $1.5 trillion market cap prediction.
And then there's the upbeat outlook for big tech, the Magnificent Seven, with expectations of earnings growth that greatly outpaces the S&P 500. Plus the downgrading of that major European semiconductor stock due to concerns over Chinese demand.
Exactly. And let's not forget the impressive 16% surge in durable goods orders, tempered by the recognition that Boeing's contracts skewed the picture. And finally, the forecast that the dividend frontier is expanding, with 20 banks set to significantly enhance their payouts in the next quarter after those Fed stress tests.
When you consider all these narratives, John, there's a clear theme. Markets are reacting to both external political influences and internal shifts in corporate strategies. It's almost like attending a dinner party, where every guest has an entirely different and equally compelling story to share.
That's a perfect analogy, Sarah. You have the disciplined macroeconomic tale, the unpredictable political subplots, and, of course, the transformative corporate initiatives. It can be a bit overwhelming at times, but it also offers tremendous opportunity for investors willing to look beyond the noise and find the rhythm in today's market chatter.
Definitely. So let's move into our detailed sector analysis, where we can really delve into technology, energy, and finance. How are these sectors influencing and being influenced by the day's news?
In technology, everything is happening at breakneck speed. Companies like Tesla aren't just competing in the traditional automotive industry anymore. They're rapidly pivoting towards robotics and artificial intelligence. This concentration on technology convergence is blurring boundaries, meaning a car maker can suddenly find itself competing with traditional tech players.
It's not just about volume anymore, is it? It's about the depth of innovation. As more companies follow Tesla's lead, we might see clear winners emerging through their mastery of multidisciplinary technologies. It's truly a fascinating time in tech.
Agreed. Now, in energy, while the headlines have largely focused on tech and political developments, there's an underlying transformation happening. With global energy markets in transition as renewable energy gains ground, traditional energy firms are increasingly pressured to adopt sustainable practices.
And that has a knock-on effect on everything from commodity prices to infrastructure investments, doesn't it? For investors, energy stocks have historically provided stability and dividends, but this blend of green transformation and legacy operations creates both challenges and potential growth opportunities. It's not as dramatic as a new app launch, but gradual change can lead to enduring results.
That's a great point. And finally, let's shift our focus to finance. The banking sector is in a really interesting phase. The news that 20 prominent banks are expected to swing up their dividend payouts after rigorous Fed stress tests suggests they're not only solidifying their balance sheets, but are also eager to return capital to shareholders. It's almost like a financial version of coming home after a workout. Soar, but stronger.
I love that analogy. For investors, these increased dividends are a welcome opportunity for reliable income, especially when interest rates might not yield much on their own. Beyond dividends, the quality of loan books and risk management are under scrutiny, positioning the largest U.S. banks at the center of this renewed focus on financial stability. It might seem a bit stodgy, but there's a lot of smart money being repositioned here.
Absolutely. And on a global scale, these shifts have significant implications. The political maneuvers affecting the U.S. dollar, for example, have the potential to unsettle global currency markets, which could affect trade balances and even commodity prices. Similarly, European semiconductor stocks, under pressure due to China demand uncertainties, could mean adjustments in global supply chains.
So investors with international portfolios are really absorbing a broad spectrum of influences, from geopolitical tensions to global regulatory shifts. It just underscores the essential need for a diversified perspective.
It really does. And expert insights swirling in the background suggest that all these movements, while sometimes appearing disconnected, might be part of a larger narrative. The convergence of technology, regulation, and geopolitical factors reshaping modern markets in real time. One analyst quipped, "If you're trying to predict the market appetite today, you might as well try balancing a checkbook on a roller coaster."
That's a perfect way to put it. It captures the essence of what we're witnessing, a market that is dynamic, unpredictable, and yet rife with opportunities for the discerning investor. So John, what are some potential future trends our audience should keep an eye on?
Well, first, keep your eyes on inflation and interest rate moves. Those subtle signals from the durable goods orders, even with Boeing's boost, should make us wonder if this manufacturing surge is truly sustainable. Similarly, while bank dividend increases are appealing, any signs of broader economic weakness could alter that picture quickly. And then there's Tesla's transformation. It's a bold challenge to conventional corporate narratives, reminding us that companies that reinvent themselves might define the next era of market leadership.
Those are excellent points. And that brings us to some thought-provoking questions for our audience. In a landscape where political influence now seems to be interfering with well-established monetary policies, do you think central banks will ever regain complete autonomy in the eyes of the market? How might Tesla's rapid evolution influence the strategies of other automotive giants and tech firms alike?
Those are fantastic questions, Sarah. And with big tech's glorious run, can smaller tech innovators realistically hope to carve out their niche, or will they remain in the shadow of the Magnificent Seven? These are questions that not only drive our discussions here at Pantheon AI, but should be on every investor's mind as we navigate this ever-changing market environment.
Absolutely. So, as we wrap up, let's circle back to the broader picture. Today's market moves, news headlines, and expert opinions paint a picture of caution, mixed with a dash of optimism. On one hand, you have political provocations and shifting currency valuations signaling uncertainty, while on the other, major tech developments and promising dividend signals suggest robust underlying potential.
It's this duality, the tension between risk and reward, that makes the current investment environment particularly exciting. It's like being at a high-stakes poker table where everyone is keeping their cards close, and yet one wonders if the next hand might just change the game entirely. Turning our attention to the sector specifics once more, let's quickly highlight a few key takeaways.
In tech, that boundary blurring between traditional industries and new-age innovation is creating unprecedented opportunities. Investors buying into this narrative are essentially betting on a future where non-tech players transform into digital innovation hubs. In energy, the gradual push towards greener practices is creating new investment propositions, hinting at a potential re-rating in markets.
And in finance, reliable dividend increases and robust risk management are providing a safe harbor amid volatility. On the global front, we're witnessing a fascinating interplay of factors. The U.S. dollar's fall, spurred by political maneuvers, might serve as a bellwether for global currency adjustments. And European semiconductor metrics provide an early warning signal for shifts in supply-demand internationally. These international developments often feed back into domestic policy and investor sentiment, creating a continuous loop.
For investors with a global lens, the challenge is to untangle these interdependencies and find pockets of opportunity that might be overlooked by more domestically focused strategies. And John, I like to think that in times like these, having a reliable resource is akin to having a co-pilot when navigating through stormy skies.
That's precisely the role that Pantheon AI is striving to play for all of you. Whether you're dissecting earnings calls, analyzing economic data, or just trying to understand the interplay between political statements and market movements, our co-pilot is here to provide precise, detailed, and insightful analysis to help guide your investment decisions.
And before we sign off, let's have a little laugh at ourselves, because sometimes the market can feel like that notoriously unpredictable friend who shows up at the party with wild stories and a penchant for dramatic entrances. You plan your evening meticulously, yet this friend's arrival changes the entire vibe. Isn't that a bit like today's market?
It absolutely is. One moment you're seeing steady growth, the next you're hit with headlines that throw everything into question. It reminds us, while numbers and charts matter, the human element, the unexpected, the unpredictable, remains at the heart of investing. So what should you take away from today's briefing? Keep a sharp eye on market trends, but do not lose sight of the bigger picture.
Understand that every headline, from political jabs at monetary policy to revolutionary shifts in corporate strategies, has a cascading effect on how capital is allocated across sectors. Stay diversified, keep questioning, and be prepared for change. After all, the market is not a static construct. It's a living, breathing entity that is constantly evolving and challenging our preconceived notions.
We invite you to reflect on today's insights. Think about how political influences might reshape monetary policy, and consider how these shifts could impact both your short-term trades and long-term investments. Are you positioning your portfolio to weather both the technological revolution and the inevitable regulatory shifts? Are you keeping an open mind about industries that traditionally have been slow to change? The questions, much like the trends we've discussed today, are layered and compelling.
Thank you for taking the time to join us on this deep dive into the dynamics of today's markets and news. We hope you found this conversation as enlightening as it was engaging. At PantheonAI, we are committed to being your information co-pilot, guiding you through the complexities of the financial world with precision, insight, and a touch of humor.
As we sign off for today, here are the key takeaways to mull over. The major U.S. indexes are showing modest gains amid careful optimism. High-profile political narratives are shaking up traditional monetary policy expectations. Tesla's pivot towards robotics and technology is capturing the buzz of the market. And global sectors, ranging from tech to energy to finance, are each experiencing their own unique shifts. Every piece of news is part of a larger mosaic, one that demands our constant attention and an inquisitive mind.
We invite you to join us again tomorrow for another episode of the PAI Morning Briefing. And remember, if you ever have questions or need further clarity, feel free to reach out to our AI co-pilot. We're here to help.
Until then, keep questioning, keep exploring, and remember that learning shouldn't feel like a full-time job. Have a great day, and thanks for listening.
PantheonAI, your information co-pilot.
Because learning shouldn't feel like a full-time job. Take care and see you next time.